This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. My name is Mike Maroney and I am coming to you today from the Monex Precious Metals studio. And it's Thursday, September 21st, the last day of summer. Let's talk precious metals. We had an interesting day in the precious metals yesterday, predicated on the Federal Reserve coming out and talking about the inevitable, which was quantitative tightening. Remember, what we've seen over the last 10 years is the Federal Reserve has added approximately $4 trillion worth of government-backed securities and mortgage-backed securities to their balance sheet. And yesterday was the day they're talking about the potential strategy to exit out of those positions. And it was very interesting because many people thought once that announcement was made that we could see an inevitable correction in the stock market. But lo and behold, the stock market pulled back a bit, but inevitably we made new highs in the Dow, and the S&P is still trading above that 2,500 mark. The bottom line right now is we are on the brink of some major changes as far as the overall economic circumstances that exist in the marketplace. And when you're on the brink of major changes, the best thing to do is look at your portfolio and try to figure out how to take advantage of what sits out on the horizon instead of looking in the rear view mirror and figuring out what to do based on what's already happened. Let's review. We've seen a massive increase in capital printed by the world's central banks as their balance sheets have gone from $6 trillion to well over $20 trillion. And what this has done is it has artificially increased the value of many things. Real estate trading at all-time highs once again. The stock market continuing to make all-time highs, and interest rates at historic lows. But are we about to see major changes based on the fact that, one, the U.S. central bank is about ready to start pulling the punch bowl from the party? And what does that mean to you, the individual investor? Now, many people assume that if the Fed is going to raise rates in December and potentially start selling off assets from their balance sheet, that may strengthen the dollar. But really, that's not the case. Because what we've seen is as the central banks have printed more and more money, the value of their currency went higher and higher because their economies did better and better. So, as we see the end of quantitative easing and the beginning of quantitative tightening, are we on the brink of looking into the abyss as far as the US dollar is concerned? We hit a recent low in the dollar of around 91. Yesterday we popped back up above 92, but we couldn't get out of our own way. And once again, we've broken back below that number. But when you think of the long-term implications that exist as far as the world's currency markets, based on the massive amount of sovereign debt that sits on their balance sheets, how are they going to exit out of this debt, and what will happen to their currencies, and where should you park capital? One, should you be in the real estate market? Of course, if real estate is doing well in your area and you're receiving income from income properties, probably one of the best investments in the world. Should you be in the U.S. stock market? Yes, the valuations are at all-time historic highs, but momentum has always been key as far as that investment is concerned. But what you should be doing is looking to diversify into undervalued assets. And when you look at the board, there's not a lot of undervalued assets out there, but precious metals actually fit the bill. Over the last 5 to 6 years, we've seen a low in silver of $13.65, and we've seen a high of well over $21. In the gold market, we've seen a low of around $10.50. We've seen a high of over $1,900. So gold and silver are both trading at the lower end of the range. But if the expected drop in the US dollar starts to actually materialize, what better place to have a portion of your portfolio parked than in precious metals? Gold recently tracked all the way up to 1360, and we're in the midst of a little bit of a pullback. We call that a correction. And when you have corrective activity in the beginning stages of what many people believe to be a long-term bull market, it creates strong buying opportunities. Right now, gold is trading at around $12.94. Anything below 1300 for the long term, you should do extraordinarily well. And in the right circumstances, gold could make new all-time highs. Now, silver closed today just at the $16.95 to $17 range. And remember, silver's traded as high as $50 per ounce. It's the sister metal to gold. And if gold does what many of the so-called financial experts believe it could, and that's make new all-time highs and potentially far exceed them, silver may actually be the best buy on the board. With the geopolitical issues that exist throughout the world, and Mr. Trump making some very interesting statements and putting some new constraints on the North Korean economy today, what could happen as far as that situation is concerned? What's happening in the Middle East, and how will we handle those problems? What's happening with Russia and their so-called manipulation of the U.S. election? All of these things could continue to cause anxiety, and any one of those could actually trigger major problems. But based on what's happening today, precious metals may be one of the best investments on the board. Now, if you've never been involved in precious metals, or if you're curious why and how you can get involved in precious metals, give us a call here at Monex so we can talk to you about potential strategies that may just fit perfectly in your portfolio. Thank you.